We have to look at the spot ETF inflows and also on the liquidation heat map levels because they are interesting levels above us. And of course, we have to take a look in the chart analysis on the day chart because we had a bounce. And of course, we have a really interesting pattern on the smaller time frames. So guys, if you want to see this and more, watch until the end. And if you like our videos, please leave a like and a subscription. And I would say have fun with the video.
Today in the on-chain data news, we first have to have a look on the Bitcoin spot ETF flows because we saw a significant inflow into the spot ETFs on Thursday, which is the fourth day this week with big inflows into the spot ETF, which is a very, very good sign for Bitcoin. We saw accumulated over this week nearly $1.9 billion inflowing to the Bitcoin spot ETF, which is such a significant buying volume, which absolutely supports the Bitcoin price and which is, in my opinion, the case why we are seeing this consolidation in these high price ranges for Bitcoin at the 68,000 at the moment. The next thing we have to look at is the liquidation heat map. We just saw this setback, which was really fast, and then we pumped again. And now we are more and more forming this liquidation zone between the 68,000 and the $70,000 price range for Bitcoin, which means if we are breaking the 68,000 to the upside, there could be some significant liquidation which could push the price pretty fast to the $70,000 mark. In the funding rates for the exchanges, we saw no big changes. The funding rates are still in a pretty normal level for these high Bitcoin prices we are at the moment. We also seeing the CVD spot still rising and the open interest is not rising at the moment, which is a good sign because spot buyers are normally holding longer their Bitcoin and not selling this fast, while trader with open positions, which is indicated by the open interest, are normally selling faster, which also means these data are pretty bullish at the moment. And the last thing we have to talk about today is the Bitcoin energy value. Bitcoin energy value is the value which is the fair price per Bitcoin for the energy consumption by mining Bitcoin, which is providing the blockchain, the network capabilities of Bitcoin. So we can clearly see here in the last 2-3 years, there was a big rise in this energy value, which was definitely caused by the insane rise of the hash power. And this also means that the mining companies are still mining by an energy value, which is pretty high. And we also can see that we are close to the halving. The halving is happening in 37 days and the energy value and the Bitcoin price is normally round about the halving at a pretty even level, which is the case at the moment. And we can see 2020 this was also the case, and also 2017 we saw that the energy value and the Bitcoin price were pretty close together. So this is also a long-term indicator which is pretty bullish because normally in a real bull market we are far above our energy value, which means that there is probably much more space for Bitcoin to go to the upside. But we definitely have to have in mind this chart here shows the last 10-12 years, which means this is a very long-term analysis, but it's giving us a good hint where this bull run could lead and that we could see much higher prices per Bitcoin in this bull run than the nearly 70,000 we are at the moment. But for now, I would say we have to look at the charts for the smaller time frames and what could happen for Bitcoin the next 1 or 2 days.
Our third green daily candle since our bigger correction on Tuesday. For me, currently, it's really interesting if we will see another all-time high in this week. Therefore, it's getting really interesting where our weekly candle will close. Currently, we are at 7.0%. It's getting interesting if we could do maybe another all-time high in this week. But first of all, we want to answer this question about the new all-time high on the smaller time frame. What happened on the daily time frame? We have still our bounce at the $63,700, but it's getting really interesting on the 4-hourly time frame because currently we are seeing here the bounce from the 0.786er Fibonacci retracement level. If we could still hold this level, it's a really bullish sign. Also, we talked about this smaller downtrend we broke through in yesterday's video. So for me, also some bullish momentum we are currently seeing in the market. Also, what is really important right now, this smaller rising wedge on the 1-hourly time frame, it could be that with a breakout to the downside from this rising wedge, we could see maybe another smaller correction down to the price level. If we measure the price target of around 64,000 US dollars, could be another retest of our latest lower lows. But currently I don't think we will see a bearish breakout from this pattern. Why? We still have the Friday inflows from the spot ETF. It's getting really exciting what we see in inflows. We will talk about the ETF inflows in tomorrow's on-chain data part, but as we still holding this buying pressure from the big finance and asset manager, I don't think we will see this breakout to the downside. But it's getting interesting if we could maybe break through our uprising resistance we are currently seeing, so our neckline, we could say, if we manage to get a breakout, or better say a candle above our uprising resistance, then for me it's also a really bullish sign. So maybe this could bring us to a new all-time high if we manage to see this close. That's at the price levels I'm watching right now. If you liked the video right now, please leave a like, subscribe to the channel and activate the bell. We see us tomorrow in the next video. Bye.